Hello and welcome to this session brought to you by the Academy of Practical Accounts in conjunction with your institution. In this session, we'll look at the recording of an income, a refund, and the numbering of documents. The objective is to identify and record a document for a cash income and refund, then trace the double entry and identify the affected reports at the year end. Now we shall be looking at the source documents. We'll look at the recording forms and then trace the double entry in the general ledger. Finally, identify the affected accounts at their end. Now, the source document should be a receipt. Now, this is a receipt. In case of a cash transaction, the source document is a receipt. An invoice is for a credit transaction. But then we've got either receipt or invoice depending and being determined by whether cash was received or not. Now, this is an income for either goods sold or service fees, one of the two. So now let's proceed to the recording form. Of course, 33,500. Now, this is an income for the whole financial year. And remember, in this demo, we try to bring to summarize transactions for a whole financial year because tax is based on an annual basis where we have the tax allowance of 11,000, which is probably 11,500 at the moment and will be 12,500 in the following financial year. Okay, now let's proceed to identify the recording form. Click on the device and it's displayed here. This is our mobile device. And the form we're going to use is form number 1. Now this is for all income, whether it's the main income or other income, we're going to use one form with the aim of simplifying the process. Non-accountants shouldn't go through the hassle of classifying incomes. It's an income and that's it. Maybe we can give a narration to give it further differentiation. Now, one other thing you should note is the document number. Now, we have arranged them and we say document number 1 is for money capital invested. Document number 2 is for a cash income. Now, the software is also designed to auto-generate document numbers just to save time. Ideally, we assume this number is not there and that number has got to be copied from the number generated by the recording form. Now let's change this to a horizontal alignment. Okay, let's drag it to the left. Okay, now the date is preset as was explained earlier on. Let's scroll to the right. We ignore the financial month and the financial quarter. Of course, our financial year is April 16 to March 17, which means that the month of March is month 12. Let's ignore that. Now that document number is number 2. It's about saving time, and then we are saying that we copy the number 2 onto the document. As far as identification purposes is concerned, there should only be a single number 2. So even if we don't indicate the finer details of the date, there is only one document number 2. Okay, so we shall not select the date. We want to save time. Now this form here, there's only one account for income, that is account number 5, just to save time. Of course there is more accounts if you've got the time, but we are saving time. And then by default, most transactions for small businesses are cash. Market stall in particular, this is a cash transaction. The cash account is pre-selected. However, if it so happens that there is a different account that received the money, then there's a drop down to select accordingly. But in this case, the default account is cash. So what we need to do is only to record the amount, which is 33,500. And after typing in the amount, we click on the device, the keyboard disappears. The narration here is all income. This one can be changed. Okay, just click the the back button, and then it can be changed to whatever you want. That is modifying the narration. Okay, so that's all income, and all we need to do is to click save. So all that is done is to enter the amount and click save. So we're going to save and next. We're going to save and next because we're going to use the same form to record the cash refund. Now the cash refund, let's look at the document. The source document for a cash refund is a payment voucher. All right, now that means it's money paid to the customer. That money was paid in form of cash, and it should come from the same income account, which is income account number 5. Now there is another form which could be the 2-entry form that we could use for this, but let's use the same form and we simply reverse. Now in the case of a refund, we are going to say that the money is going to still come from the cash account because it's the account which received the money initially, the 33,500. So it's part of that we are paying back. So we're going to record 120 as a negative amount. 120 because it's paid back. Okay, and then we can modify this one. We can say this is sales refund. Sales refund. Okay, and that's it. Now what about the document number? This form has generated a document number. So even if the date is not very particular, we are going to use the document number and we can establish and say there is only one single document 3 in the whole filing system of financial year. And now we are hinting on the idea of filing all documents on a single file. So all the incomes, all expenses, asset documents, bank statements, all are going to the same file for the simplified accounting system. We don't need to separate them. All we need is to be sure that document number 3 is a refund and what is document number 4. And that's it. Anybody who wants to verify will come to a single file. So that's it. What we need is to save and close the form. So we're going to save and close. And that's about it. Now that is done. Now the next step is to look at the double entry, and I think we need, let's rotate it to the vertical alignment. Now here we're going to look at the double entry in the general ledger, which we're going to find among the periodic tasks and reports. Click that one and then scroll up. And the general ledger is P5. That's P5. And remember, the month we are recording for is not month 1, so there is no data for month 1. We are recording for month 12, so we scroll down and get on to month 12. There we are. Now we have recorded 3 documents so far. So let's pinch this. Let's pinch this to fit on our screen. And probably let's expand the device to the biggest, to the maximum possible. And we pinch the display a little bit more. We need to see the amounts as well, and that is very good. That's very good. So transaction number 1 was an owner's investment. Okay, we looked at the double entry. The bank account was debited and account 271 was credited. Transaction number 2 is the sale of 33,500. Now the income account was credited and the cash account was debited by the same amount. And transaction number 3 is a sales refund. Ooh, the all income account was debited with 120 and cash account was credited with 120. Now let's rephrase it and say the income of 33,500 was recorded onto the all income account. That is the destination of that value. And retrospectively, we can say, good. Now, the balance here increased and the balance here increased. I don't know how we can run away from the debit credit. And then this refund. of 120. Now this refund of 120 reduces the sales value from 33,500 to 33,380, and then the cash balance also reduces from 33,500 to 33,380. That's how it works. So we have traced the double entry, and the next step now is to look at the accounts with the reports rather which are affected so far by the recorded transactions. We have 3 transactions recorded. Now the tax return is, that's A1, A2 is affected, B1, B2, B3. All the reports with the yellow highlight are affected so far. Now let's see, yes, and then of course the capital accounts, T2, we had a look at T2. All right, now let's have a look at these reports on the device itself. Now these are period reports. Let's go to the mini reports checklist. Remember, we don't want the non-accountants to get embroiled in these 80 reports. We're going to look at the mini year-end reports checklist. So we are saying A1 is affected by the recorded transactions so far. So let's have a quick look at this one. Quick look at A1. We condense this. All right, we can see the income of 33,380. That's the net income. So we don't use the returns something. It goes, we don't use the sales returns account. It goes straight to the sales account and the balance is reduced. So the 33,380, and then we scroll down. Now, where are the, oh, we haven't yet recorded expenses. All right, yeah, we haven't yet recorded expenses. We'll do that in the next video. So this one doesn't make a lot of sense at the moment. Now, just to confirm which reports are actually affected. Now we'll look at tax calculations. We'll look at A2 is affected. We may not look at all reports, but in your spare time, please look at all these reports. Now the tax calculations so far, let's see. We got a profit of 33,380, and then after deducting the personal allowance of 11,000, we are left with the profit to tax of 22,380. Now 22,380. If we removed the class 2 NI, so we basically reduce that to 0 because it's based on the number of weeks. Class 2 NI, so there is no NI computed. And then we are saying that class 4 NI should not be computed because some people don't use national insurance. So there is no NI computed at all. So we are saying 20% of 22,380 is 4,476. And that is the tax. And the income, and your income is 28,904. Now, I don't want to go into those details, but the monthly income, now this one we need to adjust. We need to adjust that one as well. This should be the weekly income. Anyway, let's go away from this one and have a quick look at the profit and loss account and the balance sheet. Quick look at the profit and loss account here. Profit and loss account, we see the 33,380. That's right, yeah. Actually, we shall look at more reports after recording the expenses. So now what we have done here, we have recorded the incomes and the sales refund, and that is the net income after deducting the refund, and the same effect is felt on the cash account. So that's what they should look like. And that brings us to the end of recording an income plus a refund and the numbering. Please remember, we've got let's look at these forms quickly. We have got forms 1 up to 5. Let's see. Yes, forms 1 up to number 5. they generate the document number. So we basically copy the document number from the form onto the document. It's great if we can record the document number in red and we circle it just to highlight that document. That one is very important. If you come to form number 6, which doesn't generate a document number, then you simply have to establish the last recorded document number, and the one recorded using form number 6 should be the next one. So in this case, if we're using form number 6 to record the next transaction, then it would be document number 3. Okay, so that brings us to the end of recording income, refund, and document numbering. In case of any questions, please, we are available online. Thank you.